Good morning, you're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service, and I'm Darshan Mehta. First, let's take a look at the headlines. Screen across Asia are in the red after US markets posted their worst fall since February over rising trade tensions. The government has cut excise duty on aviation turbine fuel from 14% to 11%. The change came into effect from today. Zee Entertainment September quarter earnings surpassed analyst estimates despite profits declining due to a high base. And IT major TCS will be reporting its second quarter earnings today. The company is likely to post margins of over more than 26% for the first time in 7 quarters. Let's take a look at how the US markets fell, and the US stock slumped to close sharply lower on Wednesday as the Dow sank more than 800 points and the S&P 500 had its worst day since February as technology stocks went into a free fall. Investors were spooked by rising bond yields, dumped equities in all the sectors, triggering a broad market rout. Bloomberg's Abigail Doolittle wraps up all this Wall Street action in this report.
Stocks sold off sharply in Wednesday's Wall Street session, with the three major averages putting in the worst day since February, while the S&P 500 logged a 5-day decline, the first time that's happened since November of 2016, right before the U.S. presidential election. As for the declines at the close, the Dow down 3.2%, the S&P 500 finished lower by 3.3%. I should mention for the Dow, that represents a shedding of 832 points, really pretty extraordinary. But it was the tech-heavy NASDAQ that really underperformed, down more than 4% on the day. Now, all of this represents a continuation of the pullback from last week on rising rates. Investors concerned that could slow the economy, the strong economy, plus fears about the trade war between the U.S. and China. What could the implications be there? As for a sector composition breakdown, all 11 of the S&P 500 sectors finished down. Tech was the worst, down more than 4%. In fact, down 4.8%, hurt by Microsoft and Apple, along with some of the fintech companies, Visa and MasterCard. The chips were weak, too. The Philadelphia Semiconductor Index, or the SOX, down 4.5%, with Intel, AMD, and NVIDIA all declining. That index bearishly well below its 200-day moving average. In fact, the stock selling was so strong on the day, especially toward the end of the session on above average volume, that Haven bonds, which had been lower earlier in the day with yields rising up at the end of the day, investors were seeking the safety not just of the Japanese yen for yet another day, but also of Haven bonds, which meant that yields actually dropped as investors did want the safety of bonds as stocks sold off. Net then, Wednesday's Wall Street session was certainly risk off as stock investors in particular searched for but did not find a capitulation bottom. In New York, Abigail Doolittle, Bloomberg News.
Well, it's certainly definitely risk off in Asia. Also, let's take a look at the Asian markets. They have opened with deep cuts. If you're looking at the Japanese markets, are down over 3% in trade. The Taiwanese markets are down almost 5%. Kospi's opened down 3%. So most of the Asian markets are trading with huge cuts that are coming in, and the SGX Nifty continues its slide. So let's take a look at what's happening, what exactly the trade setup is. Pull up the SGX Nifty and you'll come to know the pain that is there. So yesterday's gains definitely will be wiped out if we open at these levels. No doubt, probably we may not open at these levels, but anyway, it is going to be a big cut that's coming in as far as the Nifty is concerned. Again, below the 10,300 mark in trade. The ADRs also fared pretty poorly. Tata Motors was down 5%. Infosys, Wipro, HDFC Bank were down anywhere between 1.5% to 3%. The exceptions were ICICI Bank because of the move that came in here. Vedanta and Dr. Reddy's did manage to recover. But overall, yesterday was a good trading session. If you're looking at what happened with the Nifty and the broader market, there was traction that is seen. So if you can pull up the Nifty, the Bank Nifty, the mid caps, and that probably will give more understanding of what exactly is happening as far as our markets are concerned. So yeah, you have it here. The Nifty was up 150 points, pretty much will be wiped out in trade today with another 50-point cut. But there was more outperformance from the Nifty Bank, which was up almost 3.5% in trade. So there was clear traction that was seen as far as the markets are concerned. Look at the mid cap and the small cap end of the market. They also did manage to move up significantly in trade. Let's pull up the other factors as far as the trade setup is concerned. Yesterday, these were the three sectors that managed to do well. Auto, after a while, did manage to move up. Maruti was one of the prime reasons. Metal and pharma, again, moving up over 1% each. So it was a strong day as far as trade was concerned. On the other side, if you're looking at how this week performance has been, most of the counters have managed to swing back into the green. So media, energy, as well as pharma have moved up. So energy is up almost 3.5% after almost a 15% drop that we saw in last week. But nevertheless, there will be some sectors in which there will be selling. So IT, FMCG, and real estate are the sectors in which there is selling pressure that's coming in. Now, as far as the fund flows are concerned, 1,200 crores of net selling, and DIs have been net buyers. And at this point of time, it's even Stevens what's happened this month between the FIs and DIs on the trade setup. Now, if you're looking at what happened yesterday, 150 points we moved, and basically it was an account of the banks. ICICI, Axis, SBI, HDFC Bank contributed to majority of the gain. IT was weak in trade. Pharma was slightly weak, with Sun Pharma falling. TCS, Infosys, and HCL Tech were clearly down in trade. As far as the F&O markets were concerned, fresh buying was seen on the Nifty, open interest build up of 1% on the long side. If you're looking at the Nifty Bank, that saw open interest build up of 30% on the long side. A lot of positions will get unwound in trade today. Now, pull up where total open interest build up is. 10,000 continues to be the big support level for the market. Put writers are active from 10,000 to 10,500, and call writers are active from 10,500 right up to 11,000 level in trade. Now, tomorrow, if you're looking at it, there is open interest build up of 10,300, 400, and 500. Probably these positions will get unwound in trade today. Call writers will become much more aggressive, and we had been indicating yesterday that call writers weren't aggressive at levels of 10,300 and 400 for the past few days, given the fact that a technical bounce back was something that could be anticipated. Pull up what happened yesterday. Yesterday, what happened was at every level, put writers actually shed positions and they shed positions at higher levels, and they wrote in at levels of 10,300 and 400. So yesterday's indication does indicate that even the bulls at this point of time didn't have that confidence that they would take the market much higher in trade. So probably today you will see these red lines go down and the green lines actually come up. As far as the stock in the F&O band is concerned, only one stock is there, and that is IDBI Bank. The Nifty PCR moved up. The Nifty Bank PCR also managed to move up to 1.34, so almost managing to double from the lows. A couple of stocks that I want to point out. First of all is Ramco Cement. Cement as a pack was weak. It didn't fall much, but look at the open interest build up, 15%, that too on the short side, so probably could react in trade today. Kaveri Seeds of fresh buying, open interest build up of 10% on the long side. You have counters like Shriram Transport, the entire NBFC pack managed to move up, open interest build up of 5% on the long side. And the final stock we want to talk about is a short covering that was seen in Piramal Enterprises. Open interest was down 12%, the counter moved up 10%. But there's much more on the other side of the market. When move on to the currency side of the market, the rupee moved up 18% against the dollar to close at 74.21 yesterday. That marked the first rise in the rupee against the greenback after 6 consecutive sessions of decline. The mild recovery in the rupee comes on the back of some weakness in the dollar against major currencies overnight and the expectation of improvement in liquidity in the system going forward. Despite yesterday's rise, the rupee is still down around 16% so far this year. The other big news that came in yesterday was the aviation turbine fuel. As airlines are grappling with pricing pressure, rising crude, and a weaker rupee, they have found some relief at last. The central government has cut excise duty on ATF. Somit Sarkar is standing by to tell us what this means for the aircraft carriers. Somit.
So if you see, Government of India has lowered the excise duty charge on aviation turbine fuel to around 11% from an earlier charge rate of around 14%. Now, this move will definitely result into a positive reaction for on the aviation companies, as it was not anticipated, especially after government had introduced the custom duty on imported aviation turbine fuel. Now, this move would bring in some relief for the aviation sector, which has been reeling under the pressure of price competition, weaker rupee, and higher crude prices. Now, if you see the current the new tax structure, the ATF rate, the excise duty rate will be 11% for domestic routes, plus there will be a state VAT which varies between 20 to 30%. For Udan and regional routes, that center taxes are different. It's 2% excise charged for Udan routes, while VAT For regional and Udan routes, it ranges from 1 to 4%. For international routes, there is no taxes charge, which means the company which has more domestic operations in India will benefit the most with this cut in excise duty, and that will be Indigo. Because if you see among the 3 listed airline companies, Indigo has deployed nearly 85% of its capacity on this domestic route. Now this will be followed by SpiceJet, which has around 70% of its capacity deployed on the domestic routes, and then it will be Jet Airways, which has around 36% of its capacity deployed on the domestic routes. Now if you see the fuel cost per available seat kilometer for these 3 airline companies that they incurred in the first quarter of financial year 2019, it was in the range of around 1.5 to 1.6 rupees per kilometer. Now this would have been lower by around 2.6% for Indigo if, with this new tax rate, while for SpiceJet and Jet Airways it would have been lower by around 1.9% and 1.3% respectively. So not much of a benefit, but definitely a positive move for the aviation companies.
Okay, definitely we'll watch out for the aviation company. They'll react positively, but given the market conditions, we're not sure what exactly can happen. Let's shift our focus to commodity market. Jayesh Khilnani joins us with all the updates from the commodity space.
Morning, Darshan. Let's start off with oil prices, which did see a 2.5% decline in the overnight session. Now, this was largely on the back of concerns that have now shifted from the supply side to demand side because Hurricane Michael has hit Florida, and it is the strongest storm since 1992 to hit the U.S. market. Now, the storm has actually shut down 40% oil production in the Gulf of Mexico. So, the entire impact, we'll have to wait and watch how it actually pans out. But in terms of other news, API is likely to report an inventory buildup of more than 10 million barrels for last week. So that's as far as oil markets are concerned, but also not well with the metal space as well, which the index declined about 1%, and prices in fact fell on demand concerns on the back of a rally in the a plunge in the equity markets that we saw in the US market yesterday. Nickel posted the biggest drop in about 3 weeks, while the others, zinc and lead, declined over 1% each, and we had copper and aluminium, which also closed negative. Now, tin was the only metal which has been surging and in fact closed higher for the second straight day. However, if you look at the Shanghai Futures Exchange, most of these base metals are in fact trading with a negative bias. But all of this actually boded well for the precious metal space, and we saw gold rates advance on the back of the demand eclipse that the US markets are showing.
Okay, many thanks for that, Jayesh. We'll certainly watch out for how commodities pan out in trade. But TCS is expected to continue with a steady growth trajectory in the second quarter. Analysts expect the technology services giant to report a good set of numbers. Let's take a look at what we are anticipating. First of all, on terms of the margins, we are expected TCS to post a margin in excess of 26% for the first time in the last 7 quarters. If you're looking at the dollar revenue, we are seeing a growth of 2.8%. Currency tailwinds certainly helping them. Income from operations in terms of rupee is seen up 6%, so that will be much more because of the currency tailwind. EBIT is seen up almost 11%, which means EBITDA margins of 26.2%, and profit is seen up close to 8% for TCS this time around. Likely, if you're looking at the margins, let's stick with margins. Margins are likely to be anywhere in the 26 to 28% target that they have said. The last time the operating margin were about 26% was almost 7 quarters ago, and that was in the 3rd quarter of FY17. The rupee has actually depreciated significantly, so the dollar has strengthened 6.5% against the rupee in the 2nd quarter, and that will help the rupee revenues, which means that every $1% rise in rupee actually leads to a 20 to 25 basis point improvement in margin, and that is why that we're seeing a number that will be in excess of 26%. Management has shown confidence in the revenue outlook, so that is something that's doing well. There is recovery in America, there is recovery in the BFSI sector. Impact of the Nielsen and Scottish Windows deal is expected to be front end. So all this something that will aid the revenue of the company. Few things that I really want to watch out from TCS is the visibility on the BFSI sector and what will happen as far as the North American market is concerned. What more they expect if the rupee does manage to weaken further, what's the impact on the margins going ahead, and what are the factors that will influence the FY19 margins. So this is something that we need to watch out for TCS. The other number that came out yesterday after market hours and was a pretty strong number was Z Entertainment. A high base failed to deter Z Entertainment from surpassing analyst estimates in the second quarter. But if you're looking at it operationally, the numbers were very healthy, aided by high growth in the company's ad revenues. Samit Sarkar is here to summarize the quarter gone by. Samit, if you're looking at it, the numbers were good. Let's not take a look at the profit because there was an exceptional last time around. But the broad operational numbers, 33% margin, that was good. What are your view on it, and what are analysts making of it?
So if you see, Darshan, the numbers were pretty strong and they were higher than the analyst estimates. Now, if you see the headline numbers, the revenue of the company was higher by around 24% to close to 1,976 crore rupees, while the EBITDA rose 37% to close to 650 crore rupees. Margins also expanded by around 300 basis points to 33%, while the net profit, however, was down by around 38%. But that was on account of no exceptional gain in this quarter and because of lower other income that the company saw. Now, if you see segment-wise, the domestic advertising revenue grew 23%, while the subscription revenue grew strong at 26%. Now, brokerages have also by and large maintained their estimates post the second quarter numbers. Now, CLSA has maintained its buy rating on the stock, but has marginally cut down the target price to around 670 from 675. Now, they said that the Q2 numbers were ahead of the estimates, led by strong growth in the domestic advertising revenues of the company. Also, the operational metrics reported by Z5 were very encouraging according to the brokerage. Now, Credit Suisse, they have also maintained their buy rating, but has cut down the target price to around 560 from 640, but that was because they have lowered their valuation multiples and not their estimates. Now, they said that it was another strong quarter for Z, with base business doing extremely well. They also pointed out that the company's EBITDA margin rose despite rising investment in the digital platform, that is Z5, which is a positive move from the company's side.
Okay, many thanks for that, Samit. Shraddha Babla now joins us with all the stocks which are making headlines today. Shraddha.
Right, so Darshan, first on the list is Zydus Wellness, which is said to be close to buying Complan and Glucon-D from Kraft Heinz in a deal which is said to be worth about 4,500 crores. That's the Times of India report. You also have PTC India, which has signed a fresh pact for supplying 200 megawatts of power to Bangladesh for 15 years. And over this 15-year period, they will earn about $1.8 billion. That's about 890 odd crores every year. ITI Limited has won orders worth 334 crores. You also have Cochin Shipyard, which has said they will consider a share buyback on their meeting on October 16. So let's see how that reacts. Indiabulls Integrated Services has said that their reorganization committee has recommended the board that there will be a demerger of the company's non-financial businesses. A lot of it is pharma. All of that will be demerged into Sorrel Infra Resources. So let's see how this reorganization within those Indiabulls Group companies works. Dilip Bilkon has been declared the lowest bidder for a EPC project worth 1,000 crores from Coal India's subsidiary. And then finally, you have GE Power, which will close its factory at Shahabad with effect from October 11. Earlier, the Vadodara plant was also shut. They had notified that on August 27th. And they've said that they're exploring various options to dispose the land and building and machinery. So some negative development there, Darshan.
Okay, that's all the stocks that you need to watch out for. But let's now listen into an exclusive conversation with Microsoft CEO Satya Nadella on the ongoing trade tensions. He made those comments in an interview with Bloomberg's Caroline Hyde. Let's take a look.
I think about people and institutions people build to outlast them, and I think about this globally. That's the three key things that we always think about when we say empowerment and empowering. You know, being an American company, in fact, I always say that we are a multinational company that is an American company. So we are fundamentally dependent on and also proud of the American values and the trust in American institutions and values that the world has. And so clearly, that has served us well, and quite frankly, even today, I think they serve us very well, because I think you know, our form of government, our form of democracy, with all of the debate we have, our ability to be able to set an example for what is a place where a lot of people of diverse backgrounds can come together, have a debate, and move and make progress, I think is what makes America unique. And us being born in that culture is what gives us credibility And of course, we can't take any of this for granted, either as a nation or as a company, and we have to earn it every day. And somebody described trust is this formula, which is it's about having values that are consistently applied every day or over time, and that's what engenders trust.
Are the trade tensions affecting your business, though, do you think?
In trade tensions, here, I think we're going through this phase where everybody has recognized that, let's call it the phase of globalization, has not created equitable growth in all parts of the world or in any country to all parts of the society. So every country is relooking at what are their relations around trade that help them thrive, because that's key. I mean, I think every country will put their country's interests first and look at what makes most sense. And what is it that's our responsibility as a multinational company is to sort of say, what are we contributing in each country? How are we making small businesses more productive, or public sector more efficient, or multinationals in that community country more competitive? If we do that, we're good. If we don't, we have a challenge, because I think long-term stability for us comes from our ability to create more surplus and more opportunity outside of what we do.
There are few more things. There are few things more liberating than travel, although some of the passports offer more freedom than the others. Global citizenship and residency advisory firm Handley and Partners has released its quarterly world report on the world's most desirable and least powerful passports in terms of visa free travel. Let's take a look. Okay, moving on, Cyclone Titli has made landfall in Odisha's Gopalpur district early this morning. Wind speeds are ranging anywhere between 140 to 150 kilometers per hour. The government of Odisha has declared a red alert in 5 districts where very severe cyclonic storm is expected to cause damage. Officials said that over 3 lakh people have been evacuated, while schools and colleges are shut for the day. There's lots to talk about over the course of the day, and you will find it all on the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website, bloombergquint.com, and here they are. Senior advocate Tushar Mehta was appointed the Solicitor General of India, the second highest ranking law officer, almost a year after the post fell vacant. According to an official order, India's Supreme Court is seeking details from the government over a controversial $8.7 billion Rafale aircraft from France. INFS needs around 100 crores a month to keep functioning, a senior government official told reporters. This excludes other contractual and repayment obligations of cash-strapped company, the official said. Okay, with that, it's a wrap on this edition of Daybreak. From me, the entire team making the show, thanks for watching. All you need to know comes up next on the show. Stay tuned to Bloomberg Quint.